Hi, this is Daniel, and you are watching Unrivaled Investing. This is a no hype financial channel that is mission focused to find you exceptional companies and unrivaled investments. Today, I'm excited to talk to you about NIU Technologies. The ticker is NIU. The stock is up over 300% in 2020 alone. They grew revenue by 5x in just the last 3 years. And this video goes out to my Journey subscribers, particularly Kobe, Jay, and AE, who've been asking me to look into NIU for some time. But before digging in, a quick plug. If you enjoy learning about potential multi-baggers, make sure you subscribe. If you're already a subscriber, I appreciate that thumbs up. Take a moment right now to hit that thumbs up button. And also, if you want to follow my personal journey to find these types of stocks, the potential stocks that can go up hundreds or even thousands of percent over time, go to unrivaledinvesting.com, click on Journey. Let's dive now into NIU Technologies. So they are a company that's enabling mobility solutions like scooters, mopeds, bikes, motorcycles, but it's all about electrifying it. So these are electric scooters, electric bikes, electric motorcycles. Their average e-scooter price in 2019 was around 4,900 renminbi, which is around $750. They've offered new products, new product lines that are even more affordable. We'll get into that in a second. But overall, you're talking about a price point that's very reasonable for a clean method of transportation. When you're talking about a price point that's, sub $1,000 that can get you around town, you're talking about tapping into a pretty darn big market. So their sales have rapidly grown over the last few years, rapidly approaching 3 billion renminbi, or around 500 million US dollars. This is up from less than 500 million renminbi in 2016. And so, about 85% of their business is this e-scooters, depending on how you qualify. E-scooter is a moped, is a scooter. Around 85% of their sales is this e-scooters, selling their actual products. Then around 15% of their revenue is accessories and services. At this point, 80% of their revenue is from China, selling into their domestic market, selling these electric scooters domestically, but they're rapidly trying to grow their international presence. So 80% China, 20% rest of the world. They have a sizable presence in Europe. Several Journey subscribers said, hey, look, I live in Europe, and you know what? I'm seeing these scooters where I live. So this is, whenever you hear a story about, hey, I'm seeing something in real life, maybe I should take a look at it. Those are generally great leads to prospective investments. Peter Lynch once talked about that. And, everyone has their own stories of, hey, I got exposure to this product and it actually turned out to be a great stock as well. Not surprisingly, like Netflix is a perfect example where people get exposure to it and they don't follow up and say, hey, this is actually a revolutionary company as well. But what are they actually selling? So I've sort of done a high level of their revenue growth, but what's actually driving that? And nearly 40% of their sales are tied to their Gova series of electric bikes. This was as of the third quarter. It changes quarter to quarter as they launch new products, launch new series. And the reality is it serves a full range of needs, from the electric bicycle to a motorcycle. The starting price here is 2,300 renminbi, or around $350. So even more affordable than that earlier model that I was talking about, that was $750. And you can see here this Gova series, which is meant to be sort of lower market or mid market. This one's 4,300 renminbi, but it has 60 kilometers an hour with an endurance of 70 kilometers, so a 70-kilometer range. So they're saying no anxiety about the mileage. Like, you could get around town and it's not going to take you, you could get at a good speed and you don't have to worry about, going around town and coming back, and you can charge it up in the evening and it'll only take a couple hours. So it has real appeal for a lot of different needs. If you're driving, if you're a delivery service guy, this is a great solution, and you don't have to pay, a diesel bill. But they have a full product range. This Gova series is only 40%. They have a whole lot of other products with a whole bunch of really interesting functionality, cool features, like regenerative braking that adds to their range over time, effectively capturing that energy from braking so that it goes back into the engine, so they can get more range over time. They also have really neat anti-theft functionality where, the scooter's always upright. And so the second, you move it at an angle without it being in motion, it detects like, hey, this is anti-theft, effectively creating a low jack built in to the product, which is super interesting. They're trying to create a smart e-scooter. It's not just an electrified scooter that, that's clean. It's, hey, let's add some really cool functionality to it so that this could become a premium brand. That's what they're aiming to do. And here is a another version, 70 kilometers, top speed, up to 140 kilometer range. And how have they grown so fast? It's clear that they're offering a full product markets. They have a full product market range with full product market fit. There's a lot of demand for these products that are at a very reasonable price point, and they're delivering. Like, people enjoy using them, and they're able to get around town. 70 kilometers per hour. That's you're zipping around town at a good clip. But they're also doing something right with marketing. They're very clever with their marketing, and this comes from having a smart scooter. So we conduct offline marketing and advertising through LCD billboard ads, elevator ads, bus ads, product roadshows, exhibitions, and music festivals, among others. To achieve higher efficiency on offline marketing, we leverage riding data collected from our smart e-scooters. For example, in each city, we have a heat map showing anonymously where our new users ride and park our e-scooters, a good indicator of locations of where potential users concentrate. The heat map allows us to select the optimal offline ads locations, such as LCD billboard or bus routes or residential buildings, to reach our targeted consumer groups or organize product roadshows in the most relevant venue. From May to July 2019, we ran an offline advertisement campaign called Always NIU Forward, with bus, subway, and billboard advertisement covering our major 12 cities in China. I think this is just incredible. It's like, hey, we're effectively spying on our users. It's anonymized data, but like, we know where they are. And so all their buddies that don't have one, and they have to take the bus, we're going to be putting ads so that way they know if they save up, they too don't have to ride the bus and they can get on these e-scooters. This is very like Minority Report-esque, of like seeing where people are and putting the ads that are very targeted for them. And it's currently happening in China. Like, that's how they're rolling it out, and that's how they're having very efficient sales. Very clever marketing trick, effectively by spying on the existing NIU users. And they're tapping into a huge market. Year to date, September 2020, China's electric bike market increased by 30%. So this is a fast growing market. A lot of people want to have an electrified vehicle, and it's 22 million units. This is in China alone. And to put this in contrast, NIU only sold 435,000 units. So they only have 2% market share. So they are tapping into this huge, enormous opportunity. So if you have a high degree of confidence that they can continue to grow in China and that they will take market share, you can easily pencil out, a multi-bagger from here. You're saying 80% revenue in China and they only have 2% market share. Well, if that could be 10%, if that could be 20%, that's multiples of their existing size. But that also implies that there's a lot of competition, that there's a lot of players that are selling these electric bikes, electric scooters, electric mopeds. Now, they did increase their unit sales by 50% year to date, versus a market growing 30%. So that does suggest that they are winning in their marketplace. They are taking share. But still, it's not clear to me, like, I haven't seen any data points looking at this, that you're actually unrivaled. You're taking share in a growing market. That's great. But if let's say the market stops growing and it stays, let's say, flat at 25 million units, what makes me confident that you're going to go from, let's say, 600,000 units a year to 3 million units a year? Getting like a 5-bagger on their Chinese business. Like, what's the piece there that means you're unrivaled? And I'm not seeing that data. Like, I am seeing clever marketing tricks, that's for sure. I am seeing a full range of products that are really neat. And you know what? I'd love to test drive one, and it sounds like it would be great just for zipping around town. But the $10 billion question, because if your NIU is currently around $2-3 billion valuation, closer to 3, the $10 billion question you want to ask yourself, if you're a potential shareholder, in order to get a potential multi-bagger, is, what do they have, what it takes to set themselves apart longer term? Like, do they have something special that's really going to allow them to capture 10, 20, 30% of the market long term? And they do have some commentary on branding where they say, hey, we do have a powerful brand. We're establishing ourselves as the premium brand in scooters. And, let's actually read a little bit about what they have to say here. So they say our well-designed high-performance smart e-scooters built with our user-centric product development philosophy, together with the superior user experience we offer, allow us to establish a strong lifestyle brand. With our strong brand, we have achieved exceptional customer loyalty and pricing power. Our customers are willing to pay a premium for our products. The retail price of certain specifications of our NQI and MQI models sold in China was increased in 2017. So they raised prices in 2017. That's something I want you to remember because we're going to talk about this in 1 second. Although we increased the retail price across the majority of our e-scooter models in March 2017, with the volume-weighted average retail price increasing by 8%. So they raised prices by 8%. We're still able to achieve solid growth of 123% in sales volume. So they're like, look, we're just growing crazy fast, even though we raised prices. So that reflects a really strong brand, right? As compared to 2016. Moreover, we raised the retail price of certain specifications of our NQI and MQI and UQI models in January 2018, with the volume-weighted average price increase of 9%. So once again, they raised prices 9%, and they're still able to increase volumes by 80%. To enhance or maintain our pricing power, we will continue to innovate to further improve the performance of our smart e-scooters and user experience and further enhance our brand. So if they have pricing power, then maybe they really do have a powerful brand and they will be able to take share over time. But then you always want to fact check or double check what management has to say. So let's check this out a second. So they were previously talking about how they raised prices in 2017 because they have this amazing pricing power and they're still able to increase units by over 100%. But the reality is in 2016, their gross margin was negative. That means they were selling units below the cost that it made to make those scooters. So like in my mind, that is no indication of a special brand with exceptional pricing power. You're effectively saying like, yeah, we needed to raise prices just to cover the cost of the units that we sold. And only recently have they started generating an actual operating profit. So none of this makes me think you have an exceptional brand, exceptional pricing power, that exceptional brand should translate into something like exceptional margins over time. So that's like talking about this as going from negative gross margin to positive, single digit gross margin. That is not a sign of an incredible brand, in my opinion. That's a sign of, hey, we just need to recoup our costs. Let's keep going. Now, let's compare what they're talking about in terms of branding with like a brand where people are willing to tattoo it to their arms. And like, let's look at Harley Davidson, a brand very popular in the United States, which historically had 30% plus gross margin on their, motorcycle unit sales. So if you hear a bunch of Harley Davidson tattoos, and my offer still stands, by the way, if anyone wants to get an Unrivaled Investing journey tattoo right here on their face, then I'll give you a month free. Actually, don't do the tattoo. No, don't do it. I'm just kidding. So if you believe management like that they have this incredible brand, then that would imply upside potential for NIU, like where they're currently around 20% gross margin. That would mean, hey, with real pricing power, they could jack up prices 10%, and that would be pure margin. They'd be at 30% gross margin, next year, and that would be a huge difference in terms of their economics. So that's definitely something to think about if you truly believe it. I'm not seeing the data points yet that give me that confidence. So I'd want to see it. I'd want to see further proof. But a stock isn't just about where it's been. It's about where it's going. Where are we in terms of NIU Technologies' journey, in terms of where are they heading in the future? And, the reality is management continues to innovate. They continue to launch really interesting products like a souped up motorcycle, a souped up bicycle, and this souped up tricycle. Actually, it's a scooter, but it looks like a fancy tricycle to me. Three tires, tricycle. Anywho. But the competition isn't resting either. Like the competition is innovating as well, like looking to launch products. And that's a key point that you keep coming back to is they only have 2% market share. So that's a whole, 90% plus market that's going to be innovating as well because they don't want to lose their lunch. For example, Segway is launching a product, once again, regenerative anti-lock braking system, smart seat detection, auto lock mode, air lock system, with the 20 mile per hour, 25 to 53 mile range. e-moped. Then, if you go to electric.com, that's a whole site dedicated to electric vehicles. And, they have an article on the top 5 electric mopeds we've tested, none of which are NIU's models. They talk about the Onyx is bringing mopeds back in style with US built 60 mile per hour electric bikes. So I see this space as a space that's getting a lot of potential competition, a lot of innovation. Who for sure is going to win, and that's the consumer. The consumer is going to win by having a wide range of options at affordable prices. If you have a couple $100 and you can get really zippy scooters, that's good. That's a world changer. That's a great solution around the world. But does anyone definitively say, hey, NIU is definitely going to be the one that's going to sell those? I'm not seeing the data points that make me say, oh yeah, for sure, you're the one that's going to crush it versus all these other competitors that are trying to, launch and get market share. So what are my thoughts about the valuation, recognizing, all these factors? Before diving into the numbers, you have to actually take a step back and think about this company. Like, I usually cover companies that have there's a recurring element to them, where it's like, hey, if you're doing business this year, you're expected to do business next year, the year after that, the year after that. And this company is largely based on a one-time sale. I can post a picture of this lady that drove a motorcycle 40 years ago, and now she's still driving the same one. I'll do that in the description of this video and in a comment to this video, because it's the reality. It is closer to a one-time sale than necessarily recurring. There is a portion of their sales, far, minority, that's, sort of services, ancillary aspects to it. But for the most part, it's a one-time sale. So your business model needs to be based on profitability from that one-time sale. And I'm having a tough time sizing up whether or not they're unrivaled based on reading what management has to say. Now, maybe it's too early in the game for me to size it up because they only have 2% market share against a market that's, 98% and growing, and millions and millions of units are being sold. That said, for now, they clearly are winning. They're clearly taking market share, so that gets me interested. And they're clearly tapping into large markets. They're going to be launching in Indonesia in the fourth quarter of 2020. So they're launching, and they're going to be launching products that should have appeal. If you're selling a product that only costs a couple $100 and you can zip around town and it's electric, that should have a pretty strong appeal, especially for a lot of countries that are net oil importers, and they have large taxes or tariffs that they have to pay on the oil that they're bringing in and effectively the gasoline. So I could see this as being, a big win in a lot of countries. And if they continue to take share and the pie keeps going as well, the stock should follow, I would expect, just because, look, if the demand for e-scooters, let's say, grows 10% a year or 5% a year in the years ahead, and they continue to grow at 30%, the stock should do well. That means they're dominating, they're taking share. But given how many players could enter, are entering, already compete with them, it's not clear to me who the for sure winner is going to be. Is this going to be are they going to be 20x their size in a decade from now? It's tough to sort of pencil this out when you don't know, who exactly is going to be competing with you. It's interesting if you look up what Elon Musk, if he has any interest in motorcycles, and he's like, no, we are definitely not getting into that space. And so I wonder, what's the reasoning why? It makes me wonder if it's inherently more competitive, or because of its lower price point, it just becomes much more cutthroat competition. So all these factors need to be included when you're thinking about the valuation calculation, a theoretical framework. So here's my sheet. I'll include it in the description of the video for you to check out, for you to play around with. Obviously, the stock price can go significantly higher or lower than what I pencil out. This is a theoretical framework from which to think about it. And this is part of my value proposition to you, my loyal YouTube subscribers, saying here's around the recent share price, 2.6 billion US dollar market cap. Let's convert it to renminbi. So that gets around 17 billion renminbi. And so you can see, here's their sales, their guiding, their implied growth for 2020, somewhere around 15 to 25%. revenue growth. They're targeting their growth is decelerating a lot in the fourth quarter, partly due to COVID impacts with like international demand. And so because a lot of people are staying at home. And so, they're saying, look, 15 to 25% growth this year. That's an approximate figure that I'm penciling out. And then penciling out optimized margins somewhere between 8 and 12%. They're not really there yet, but if you look at something like Harley Davidson, that is a mature business. If anything, it's a declining business. What their peak operating margins were, excluding any sort of finance benefit, because they do have a finance subsidiary, Harley Davidson, that you need to back out when you're looking at this company. And so their optimized margins is something like 8 to 12%. That's what I would pencil out, just using Harley Davidson sort of as a comp, using some sort of tax rate, 25%. That might be a bit high, just given that it's a company that's it's a Chinese company, the Cayman Island ownership. You get these different things, but either way, it's not super duper cheap. What I'm penciling out, based on 18 billion or 17 billion renminbi versus 143 to 233 million renminbi in hypothetical earnings. If they achieve these margins today, and keep in mind, you should be. It's tougher to put a super premium multiple on this company because it is a one-time sale. You sort of do need to value it with a what is your earnings today approach. What is your earnings tomorrow look like versus what are your earnings 10 years from now look like. So penciling out growth rates of 15 to 35%. 35% assumes that they really do start tapping internationally and just grows crazy, and they continue to take share in China. And then an assumed multiple, like here, this is more of a competitive market. They're not, there's 5 other companies just like them selling e-scooters, and it's 10 times multiple 5 years from now. And here's 30 times where it's like, hey, the growth prospects are still in check. They're still growing really nicely, and they have a nice amount of free cash flow, and maybe they start paying out a dividend or something like that. And so you can see it's about, I'm saying an upside downside of, upside of nearly 100% and downside of nearly 80%, based on this range. And you could say maybe I'm being a little too conservative on the downside here, but part of this is the fact that it's a one-time sale type of business. And I haven't seen enough data points to make me think, this truly is a premium brand. When you're effectively selling something at cost for a few years or just a slight premium over cost, I'm not seeing that language. I'm not seeing that data that makes me think, oh yeah, this should be, a premium brand, a premium multiple as well. So they're taking share. They have several initiatives to expand internationally. They have affordable go-to-market solutions. So they have a product. They do have product market fit. I can see why several investors are excited about it. Like if I had greater confidence on their value proposition and say, you are clearly going to beat out the other 20 million, units that are being sold, and here's why. Then I would have greater confidence. But at the end of the day, if you're growing 50% and the market's growing 30%, that 20% delta isn't screaming out to me. If the market's growing 30% and you're growing 150%, that smells a little different. That smells like, oh, you're clearly the winner in this marketplace. So that's I'd love if anyone has some thoughts or bullets or links to perspectives on why this is unrivaled versus their competitors. I'm open to changing my mind on this. And, maybe I start saying, hey, this scenario becomes more likely, this high case scenario. That said, it has run up over 3x this year. So a lot of people are sort of baking in future growth and future execution. But you know what? We're in a market where, hey, everything's running up. So maybe it gets bid up some more. That's the way it is today. There are pre-revenue companies that have multi-billion-dollar valuations. So hey, why not get excited? That's how a lot of people are playing. A lot of people are playing. You know what? If the music's playing, I gotta keep dancing. I don't always, I don't feel like that. I dance when I want to dance, even if the music's not playing, and I dance if the music's playing. I dance when I want to dance. I don't necessarily wait for the party to I don't have to dance with everybody else. I can dance in a closet by myself. But if you want to see like what I'm investing in, because everyone else is dancing to this crazy tune of the market going up these days, go to unrivaledinvesting.com. to see the exclusive content I'm putting out. I have a catalog of content that you can see, that's sort of the post that I've already made. I'm going to drop that link to the catalog of contents in the description of this video. I have an educational series. I just did an exclusive educational post on the $1 billion secret behind portfolio management and betting that most investors don't know about. Most investors, most professional investors don't know about, but it's used by among the most successful investors out there. And the reality is I'm trying to find a potential multi-bagger each month. That's my aspiration, what I aspire to do. And the reality is finding just one multi-bagger can change your life journey. So if you're interested in following my journey to try to find these potential multi-baggers, go to unrivaledinvesting.com, click on Journey. And if you enjoyed this video on NIU Technologies, I really appreciate the subscription and the like. Thank you so much for watching.